Hello, traders. Hello, warriors. And you know what else we are? We're like prize fighters, like boxers. So I want to open this broadcast with a little philosophy and psychology. You could follow me on X at Forex Stop Hunter. Traders are like boxers. We're patient as we wait for openings. We block punches with good risk management. We take swings and score points and occasionally score a knockout. But you can't step into the ring without being hit and still go the distance despite that. So that's a metaphor of the day. And it takes getting off the carpet sometimes, like Rocky did, and not giving up. But that's all part of it. Okay. We're like boxers, we're like lions. We hunt in a pride. That's what a community does. They share, they edify each other, they build up each other. And I think that's one of the most important things I've learned later in my career is I used to follow people so I could fade them. And now I have a team of people and traders that I have a lot of confidence in, that I interact with and share ideas and I've learned from. And that has made me a more successful analyst and trader. So find a community for yourself. So let's get to the markets. And when I left you last Wednesday and Thursday, and I've been talking about it for a few weeks, and I said we need to close under 103.80 for the sell signal in the dollar, and that spikes were not it. So we had some spikes underneath intraday. It was a close that was important. And here was a day that we closed at right here, this day, or was the next? The next day we closed at 103.77. That was the first close right here on the daily underneath that 103.80 identified breakdown for 2 weeks talking about it. If you took it, you had immediate gratification. I said have your stop over 420. What you should have done is taken profits, and still you have over 100 pips on it. You had about 150 and taken partial profits. When I had Jack Schwager on a couple of weeks ago, Jack's a big proponent, and he's interviewed many market wizards, including Peter Brandt, who believes in taking partial profits. If you're not taking partial profits, your assumption is that you're 100% right, which is not a great assumption in trading because conditions are always changing. But once you put it in the bank, it can't be taken away from you. So you should have partial profits, and now you go to a BE stop at 103.80. I'm expecting some type of retrace, which is beginning a bit today. Dollar's up a bit, and between this low 330 to 350 would be a sell zone, and over 380 would negate this whole move, and you have to keep an open mind. So, I mean, if we do rally and we start closing back over 380, something else is happening. It would be negating the breakdown. But you should be in a non-risk and profitable position in the dollar right now. And let's see what kind of reaction we get. You're still in it in case there is no reaction and we continue to break down. I do believe that if this is another failing rally, that we're going to be testing the par level in the weeks ahead. So that's my take on the dollar. The yen also failed with the dollar breaking down. We're at some pretty good support here on the daily. And to me, any rallies back towards 48 and a half or so is a sell in my view. And that I think we're going to eventually take out this 146 level. So we have some real nice lines in the sand, including what's happening in the yield market and the 10-year, the important level that we talked about last week was closing back under 420. would be a continuation move. And that's exactly what it did around the same time as the dollar breaking down and the precious metals taking off. So we have a couple inflation reports this week. CPI, I believe, is tomorrow. And then I think we have the PPI on Thursday. So yields could recover too. And that may be what's going to be behind the dollar pulling back and higher yields. They have to stay under 420. Otherwise, you have to keep an open mind that this is just a correction from the big rally in yields from 380 to almost 440, which was near a 50% correction of the big decline from 5%. So that's a level to watch. We'll see what happens around 417 to 420 on yields. I also wanted to talk about Microsoft, which is open now. And we're down a bit here in Microsoft. And a week or so ago, I thought we might be putting in a right shoulder for a head and shoulders top. Instead, while the S&Ps were making and NASDAQ making new high after new high, Microsoft once again failed to make new highs and they took it back down to support. We have what you call as a descending triangle. You should be familiar with the descending triangle because that's exactly what I said we had in Apple right here with the breakdown at 180 on the daily. The triangle is a little bit more obvious. Descending triangle right here. See, with the breakdown. So I'm expecting that type of action in Microsoft. And if we start breaking down under, looks like about 398, we could trade 370. Wouldn't be the end of the world. Might just be a correction for a great buying opportunity. But I believe we're going to be in a correction mode in stock indices. And I gave a call in the room and talked about it with Mike and talked about it on my streams that my preferred short of all the indices was the Dow. Now it's holding up the best today, but it actually, when it rallied, I gave a pretty good level to commit to shorts. I set up around 38.9 to 39. We had a couple of attempts up here, and now we're trying to hold support, and that we're on the verge of breaking down. We already did break down from this rising wedge. I had a few pokes above it, and now we're just holding I believe it's a 50-day or 200-day moving average in the Dow. So you had a couple opportunities to sell this, and see what I mean? The Dow did not make new highs while NASDAQ blew to new highs, while S&Ps blew to new highs twice, and the Dow failed to do so. I identified that by it having a much weaker RSI pattern than both the Dow and the NASDAQ. And my target for this move is the bottom of the wedge, and I have the wedge anchored on this low, so it would be around 37.6, which is about 1,900 points from here. 37.6. Yeah, that looks like the low right here. 37.4, so still 1,000 points before we get to the bottom of the wedge. What else did I want to cover? Oh yeah, so we had that huge move in metals with gold leading the way. We're pushing to new highs here despite the dollar bouncing. But I think if we do get some type of retrace move in equities and some risk off, that they'll both come off. But take a look at how much weaker silver has been. There's a daily with gold making new record highs. And silver now trying last week's highs, but way under the high that gold already took out by quite a bit. So I think there's potential if yields rally back towards 417 or 420 and we get some risk off in the market, that we could pull back towards 2320 in the silver market. Okay, and this is also going to be very important. Probably we're getting some upside. We're getting some upside in the miners. Looks like GDX It's trying for new highs. Here's your Newmont chart making new highs, but up against resistance. So if we get retrace moves in the physical metal market, this is going to be important that the gold and silver pull back and post higher lows, which would be a buying opportunity with stops under the low of the move. Okay, and also wanted to show the similarity in the chart. WTI still looks negative to me. I talked to Anas Al-Haji today, and I actually think that we could head towards the low 60s. I'm not sure if it's going to be China, but demand is growing in Europe, but price action is still pretty sloppy. And that also still pretty sloppy. And here's nat gas. So nat gas, we may end up putting in a low, and this time we should have a new low would give us pretty good divergence. So that's nat gas, and I believe that's going to be a wrap. So we'll see what happens with the euro here. For the dollar to be good, it should hold this 108.50 level on any pullback. And Aussie, you could almost make a bear case if you wanted to that this was just ABC, and then we have one more low coming. But I'm not going to trade it. I'm just going to watch the behavior and see what happens up at the 103.80 level. Also, with the market coming off, so is NVIDIA. A lot of people celebrated that the market held up with NVIDIA selling off $100 from an intraday high. So if this continues, this pretty big reversal day, I don't think the market is going to be able to hold up. S&Ps have very important support at around the 50.5 level, and anything under there should take us back towards 49 or maybe even the major breakout at 4,800. So we'll see what happens. Basic takeaway is the dollar could retrace some of its losses that we had last week. It's already beginning to do that. I would not chase precious metals up here because with a rebound in the dollar, I think you could see pullbacks in both gold and silver. You're getting some divergences on some shorter term stuff. If I go to like 30-minute charts, we could get, you can see maybe another high there, but silver diverged up here at the highs. We'll see if we could get another high, but I wouldn't be chasing that, especially if we have a chance for it to pull back towards 23.20. And the yen, we're waiting for rallies. A good sell zone to me would be almost 160 pips higher up towards 148.5. And that would coincide with a dollar bounce and a yield bounce at the same time. So trade well. Find yourself a good community and traders that are better than you so that you rise to their level. And I'll be back with Mike tomorrow. I'm sure Mike's going to be on today. And just one more run through the charts here. And I think we've covered everything. Bitcoin making new highs. Don't chase that either. And remember, don't just count your pips, count your blessings. Keep your dukes up and your head down. And don't just count your pips, count your blessings. Good hunting, everyone. Adios.